And joining us here first on CNBC is former Bank of England governor and Bank of Canada governor, Mark Carney. Great to see you.
Great to see you,
Now at Brookfield Asset Management. So you must be a little relieved you're not a central banker right now. It's a tricky task. They have to bring down these really high inflation rates, Bank of England, the Fed, without trying to sink us into recession.
Yeah, it's a very different world. I mean, I stopped being a central banker 2 years ago. My entire time, 13 years, it was about too little demand in the global economy, trying to stimulate, get inflation up, get demand up. Totally different scenario now. We've had a series of supply shocks. The Fed and others are grappling with that, and they've got to get very broad-based inflation down.
Do you think the Fed will be aggressive enough? So we're expecting 50 basis points tomorrow, trimming the balance sheet, about 250 for the year. Is that going to be enough?
My personal view is they probably will need to keep going after that into 2023. There's a few factors that are shifting what is balance in the economy. One of them is that the reality of COVID, unfortunately, is probably the equilibrium level of unemployment has gone up in the United States, not gone down. It's logical. People weren't working for a few years. A lot of industrial restructuring at the same time. So you get some churn. It's gone up. So unfortunately, the Fed will probably need to rise above that 3 percentage point level. They will feel a bit their way as they go. They're not going to pre-commit to doing that. But in my judgment, there's more to come in next year.
Will there be a recession?
Well, it depends on a variety of factors. It is a fairly narrow path, though, for them to walk in order to avoid that. Global economy slowing. You have the challenge of inflation, which is quite significant in the United States. They will need to raise rates a fair bit, and that will slow demand as a consequence. Now, against that, strong consumer balance sheets, housing shortages in the United States, and other factors that mitigate it. But in my judgment, it's going to be a very close run thing.
So now, in your new hat at Brookfield's been pretty active in the deal-making space. So do you expect this volatile environment and the new rate reality, inflation, to impact capital markets and the deal flow?
Well, it's certainly impacting capital markets, as you know, Sarah. It's making financing a bit more difficult for some types of deals. It's making the IPO environments more difficult. I think for us, Brookfield, we're focused on the backbone of the global economy, infrastructure, real estate, climate transition, all of those areas. Actually, this provides some pretty strong tailwinds for them. So we're pretty excited about that aspect of the environment. Obviously, we want a world that's growing strongly, and we'll do our bit to help support that.
And you've also you've raised, what, $15 billion for this new fund that you are deploying capital, you're buying businesses.
Yeah, what we're doing is, our view is that the climate transition is a transition. You can't just flip a switch and all of a sudden become green across the economy. So we need to go to companies who have high emissions, provide them with capital, get those emissions down. And that is a very, very large investable universe. It goes everywhere from utilities to steel companies, automakers, across the spectrum. So we raised a tremendous amount of capital very quickly for that. We're out there deploying it. We're seeing a huge range of opportunities and getting emissions down in the process.
Is it an awkward time for that? Because, at a time where we need fossil fuels, harder to push companies to decrease dependence and go to renewable?
Well, I mean, the price of oil is above 100. Gas is at an all-time high. Actually, companies are looking at it exact opposite way, which is actually I would like reliable, low-cost power with low volatility, which is what wind, solar, hydro, and very soon hydrogen is going to give them. So, look, we have a series of conversations, largest companies around the world, think Amazon, think others, who are looking for clean power globally because they know that relying on a volatile fossil fuel-based energy system is not in their long-term interest.
What do you see when it comes to Europe, which you have a pretty good handle on as well? Clearly, they need oil right now, and they need to decrease their dependence on Russian oil very fast. Do you see a European recession as a result of all of this?
Yeah, look, Europe came into this in pretty good shape, but it's a big hit. My personal view is that they will need to stop. They should and need to quickly stop paying for Russia's war by paying for Russian energy. That means a short-term scramble for hydrocarbons from other areas. They found some, they haven't found them all. But what it's also meant is that they have tripled. They didn't double down on the climate transition. They have tripled down. They're tripling hydrogen. They're increasing wind, solar. They're adding battery storage in scale. So again, distinguish short term and medium term. And for someone like Brookfield, it's the medium term that we're focused on.